Hey everyone, today I just wanted to make a really quick video on balanced price ranges or BPRs and also show this script that I made that helps you track them automatically. So first of all, what is a balanced price range? Well, if I turn this off really quick, I can show you. So all it is when you have a bearish fair value gap and a bullish fair value gap sharing some area in price. So we have a bearish FVG right here. We also have a bullish FVG right after that. And so the balanced price range is the common area between the two right here. So if we were to extend this out in time a little bit and just delete the originals, then this would be your BPR right here, which you could obviously use to find potential reactions. So if you go to the TradingView Marketplace for scripts and you search for BPR, you will find this, and I'll also have a link to it in the description. And obviously it does the same exact thing. It looks for a bearish FEG, a bullish FEG, pairs the two together, finds the common area between the two, and then marks out your BPR and extends it in time until it's filled. Now, since I'm on the NASDAQ, which has a pretty large price, I have my BPR threshold set to 2, so only BPRs that span more than 2 points will show. Obviously, if you're on Forex and you're trading super low prices, you're probably going to want to set this to 0 or something very, very small. And I'm also looking back at a maximum of 20 bars to find a BPR. So when we were talking about how a bearish fair value gap needs to be paired with a bullish fair value gap and vice versa, I'm only considering fair value gaps that are within 20 bars of each other to be considered as a BPR. And this setting right here just determines which BPRs are actually going to be shown. So if we turn this off really quick, so this is a good example where we have an aggressive move up and aggressive move down. So we have fair value gaps on both sides. This marks out a BPR, which is the shared area between the two. But you can see before it's actually created, price does trade into it a little bit before actually creating the BPR. So I usually still have these on my charts, but some prefer just to have a regular BPR where it's just clean price action, no trading through the zone before it's created. And if that's the case, you can just toggle the clean BPR setting and this will disappear and you'll only have ones where price did not interfere with the zone before it was created. And how you use BPRs is really similar to fair value gaps in that you're really just looking for them as a potential reaction zone. So given that your structure is in alignment with your higher time frame bias, you can see that, we just came off a downtrend right here. We had a market structure shift with this big pop to the upside, retraced, then perfectly bounced from this BPR. And also beforehand, it broke these lows pretty aggressively, came back up, and tested this BPR before heading lower. And now a similar scenario here where you have this big bullish move up in the morning session that also retraces to an optimal trade entry, so between the 618 and 786 fibs. So price comes back to OTE, breaks structure just barely with this aggressive pop here, and you have this BPR where price comes back into and rejects it immediately to proceed higher. So again, BPRs are just another tool to have in your arsenal for PD arrays and just looking for reactions in general. As with anything else, it doesn't serve as a trading signal on its own. It shouldn't be taken blindly. You should obviously have some higher time frame bias and other reasons to get into a trade. But I think this indicator just kind of makes life easier and plots them for you and could be a good way to see where price could react from. So that's all. I hope you found this helpful. If you did, please leave a like and a comment, and I'll see you in the next one.